going to continue. We are going to continue trends and support our resistance. But last week on Wednesday, because a whole lot of people have been asking me about reversal. So I'm going to talk a little bit about trend reversal before going to support our resistance. So just listen attentively, and we also have our videos on YouTube. You can watch our videos on YouTube. So you can also be a partaker and have better understanding anytime you are not available. You can watch. You can also keep watching these videos on YouTube for you to have better understanding. Okay, so let's get started. Last week we talked about analysis. Let me share my screen, and we talked about analysis last week. So we talk about types of analysis. We talk about types of analysis. We talk about fundamental, technical, and sentimental analysis. So these are the three types of analysis that we talk about. And we also talk about what technical analysis is. We also talk about what technical analysis is. We talk about the definition of technical analysis, that a technical analysis is the study of price movement in the market, whereby the trader uses historical charts, patterns, and indicators to predict the future direction of the market. So we talk about that as well. We also talk about benefits of technical analysis, that it helps traders to know future market direction easily. So technical analysis helps you to know future market direction. It helps in finding the best entry and exit point. Yes. So technical analysis also helps you to find the best entry and what exit point. That is, you know where to buy and where to sell. It also helps the traders to know the characteristics of price movements in a trend. So in the market, sorry. So we talk about trend, retracement, continuation, and reversal. So we talk about that. And last week we are talking about trends. So we talk about trend. I explained what trend is. So if you want more insight about trend, you can watch the last video. It will be posted today or failingly. So you can watch the videos and you can have better understanding of how price moves, how the trend moves from uptrend to downtrend to sideways. We talk about trends. Then we talk about how trends move from higher lows to higher highs. Keep making series of higher lows, keep making series of higher highs. And I said that during an uptrend, all you need to do is to keep buying during an uptrend. And in a downtrend, all you need to do is what? You keep selling. So downtrend has series of higher, lower highs and lower lows, lower highs and lower lows. So these are definition of what? Definition of a downtrend. Okay, so we talk about retracement. That retracement is the temporary price movement against an established trend. So what does it mean? It means that the retracement is a temporary price movement. That is, if the trend is going up, the temporary movement is what? Is the retracement. So that is retracement. Then after a retracement, we talk about continuation. So these are the videos that we spoke about last week, and they are all present in the previous videos. So now let's talk about reversals today. Now I'm going to share my white screen today, and we will talk more about reversals. We will talk more about what? We will talk more about reversals. Reversal is what traders fail to understand. You know, when I mean by trader fails to understand is, yes, we have trend change. You know, the reversal is a major change in price direction of any trading instrument. So a reversal can occur to either the upside or the downside. So we need to know when the trend is over and when the trend has tendency to change. So this is trying to tell us when the trend has tendency to change. So there are some certain things that we need to look out for. So I'm going to my white screen, although today we are going to talk about support and resistance, but I want to branch through what reversal is so that we can have better understanding about trading, about what reversal is. But please, whatever you have been taught, please try to practice it. I believe you all have a live account. Congratulations to those who took our trades, our signals today. I believe they enjoyed their profits. So if you have a live account and you don't have understanding of how to trade, you can be picking our signals and our analysis on the group today. So once you pick our signals and our analysis, you make profits from them, you make beautiful profits from them, and you keep learning with your demo account. So if there's no excuse that I don't have money yet, I'm not too good, I'm not too solid to start trading. You need to trade your live accounts because you need to make money. So when we are giving analysis and signals, people make money. Like today, we give GBP USD and AUD USD on the sell, and a lot of people make profits today on our signals. So you can be using our signals to be picking trades on your live account while you practice with your demo account. Okay, so now let's talk about reversal. I am going to share my white screen and I am going to explain what reversal and types of reversal and what we need to know about reversal to us. So please, if you want to learn, you need to take, you need to write this down, jot it down, write it down, pick it somewhere, so that when you see these formations on your chart, you will understand that a reversal is about to occur. So the first part in reversal that we will talk about, the first aspect that we will talk about for reversal, the first aspect we will talk about for reversal is head and shoulder pattern. Okay, so I'm going to type it here, reversal. So types of reversal. Number one is the what? Head and shoulder. Okay, so the first is the head and shoulder. Due to your demand, a whole lot of students have been telling us to teach us, to tell them how to understand reversal. So I want to use this opportunity to branch a bit, tell us about what a reversal and how to identify a reversal before we go back to our slide. Okay, so don't get it twisted. So when I'm talking about head and shoulders, it happens in an uptrend and in a downtrend. So if you're having series of uptrend, so remember I said last week, if we want to have a trend, we have a highs, then we have a lows. Sorry, we have a low, then we have a higher lows, higher highs, higher lows, higher highs, higher lows, higher highs. So remember, this is how a trend moves. It doesn't move in one direction. It moves in a trend. So now, remember I said that in an uptrend, what is very important for you is to know when to buy and when to sell. So in an uptrend, we have series of higher lows. So like I said, this is our low. This is the first low. Let me write it. So this is the first, this is the low. I'm going to use L as our low. So we have this as a low. And after the low, we have the what? The high. So the H is the high. Then after that, we have the what? We have the lower high. So this is the lower high. Then, sorry, not lower high. I'm sorry, that lower high, it was a mistake. So this is the what? Higher lows. We call it higher lows. Why? It is higher lows because this new low is higher than the previous low. Remember, fundamental analysis, technical analysis is using past price experience to make prediction of what will happen today. So you are using what has happened in the past, what has happened behind, to judge what is happening presently, so you can use it to predict the future. So before you pick a trade, always look at what has happened in the past. In your left past, the last swing high or the next swing low, you look at what price is doing towards that area. So we have a higher low. The next thing we have here is a what? We have a higher low. So the next thing we have is what? is what? Higher high. Now, remember in trading, I said something in trading. Once an uptrend is being discovered, all you need to do is you will keep on what? Buying until you see a reversal pattern, which I am going to teach us now. So for an uptrend, when you have series of higher highs, higher lows, we have another higher highs here. We have another what? Higher lows in this region. We have another higher highs here. We have another higher highs here. And how further up, we have another what? Higher lows here. Okay. Now, what are we expecting? Since this market has broken this area, we are expecting a new high, which is a what? Higher high. Okay, now let us talk about this area. A reversal used to happen at market extremes. So if a reversal wants to happen, the price might have been, if it's a bearish reversal, that is, if it's a bullish reversal, that is, bearish reversal, that means that price has been moving up for a particular time and it wants to change direction. So don't get it twisted. Reversal is different from retracement. Now, reversal have its own pattern, and that is why I'm giving us head and shoulder as the first one. Reversal types, head and shoulder. I just want to brush through it before we go to support and resistance. So now, when we are talking about this, we have a higher low, higher highs, and this is higher lows, higher highs. You know, I said that in an uptrend, all you need to do is, once you've noticed a buy has happened, all you need to, in an uptrend, all you need to do is buy as lower, higher lows. So this is where you are going to buy. This is higher low, the first buy, second buy, third buy, fourth buy. So with this, you'll be able to follow the trend. Now, if a reversal wants to happen, the first thing that will happen is when you have a higher low. So the first one is head and shoulder pattern. And for the head and shoulder, you know, we are expecting a higher low here. So we see another low, which is higher than this. But instead of it to form a higher low, you look at this area. You know, I said this is the last area to buy. You buy here. If you are following the trend, this is the first place you buy. You buy. Higher lows, you buy. Higher lows, you buy. Now, this is the last place where they bought. Now, you look at it. This area and this area are equal. Sometimes they are not usually equal, but most of the time, they are equal for a proper head and shoulder to form. So you saw this high, this higher low, and this higher low are equal. So the first thing is telling you that the strength of these people that sold here, the number of people that took their profit in this place are more than the number of people that are buying at this area. So the first thing you do, price come back to the previous higher low to form equal lows. So it forms one low here. So it forms one low here. So we have a low here and we have another low here. So we have two lows around this area. So when price forms one low, higher low, it forms another low here. Then instead of it to form a equal high, instead of it to form a higher high, price comes back to form a lower high. So you know this is the highest high, but price came in this area and now formed a new high, which is lower than this previous high. You see that it forms a new high that is lower than this previous high. So when you look at it, you look at, okay, so this area is lower than this high, is lower than this high. So the next thing you look out for is price to form a new lower low. So once it has formed a new lower high and you're looking at it around here, that this high has formed, so you look at it for price to break this region. So it has broken this low to form a new what? Lower low. So we have lower low here. So we have a new low, which is a lower low in this region. So when price does that, you should know that there is no more higher high again, that we now have a what? A higher low, a lower high. So when you see a lower high and price now forms a new low, which is lower than this low. You know, this LL means lower low, which means this new low is lower than the previous low. So at this point, you look at it that, okay, since this area has broken, that is why some of my charts I usually write break the market structure. So let's say sorry about it. Sorry, okay. I think the network unmuted me. So can you hear me now? I need you to chat if you can hear me now, okay? So if you want to communicate via chatting, okay? So like I said, the reversal pattern that we are going to talk about today is head and shoulder. Okay, head and shoulder. Okay, that's great. Okay, that's great. Okay, so we now have a lower, higher, low, lower highs, higher, low. Then we have higher highs. We have higher lows. We have higher highs. Please chat. MD, I need you to just chat, type whatever questions you have on the chat box, and I'm going to reply you, okay? So now this was where I was earlier. So this was where I was earlier. Okay, so MDPC, I don't know, just try and chat. Okay, just try and chat. Okay. So this was where I was earlier, and I said in an uptrend, you buy here, buy here, buy here, buy here. Okay, so buying in an uptrend. So we now have, this is a higher low. Let me quickly label it. We have a low. We have a low. The next is a high. The next is higher low. Okay. So let me quickly label it because of our time. The next we have is higher high. Next we have is higher low. Next is what? Higher high. Okay, so next is what? Higher low. Next is higher high. Next is what? Higher low. So now remember I said that in an uptrend is you buy in every higher low. So once price has made its higher low, then you keep on what? You keep on buying. So once price has made its higher low, you keep on what? You keep on buying. Now let's look at this scenario. This is a buy, you buy at higher lows. When price is coming down, you keep buying. Now at this region, this is a point of interest. I want us to look at this recent higher high, at this higher high 1 and higher high 2, maybe I should label it. Now we have this higher low here. Now our expectation is that price should go up and break this higher high for the uptrend to continue. But it did not break up. It did not break this higher high. What did it do? It comes up and could not, it forms a new high, which is lower than this previous high. So at this point, all what you need to know is you need to wait, because this and this area, we have two higher lows here, equal lows at this region, but price fails to create a new higher high, which makes it a high that is lower than this high. So when we have this scenario, you need to wait for price to form a new low, which is lower than this low. So when price breaks and forms a new low like this, which is lower than this previous low, so we have low or a new low, then you know that from here down here, you think of what? Selling. So you don't just sell like that. All you need to do is you will wait for a retracement to occur. So once a retracement has occurred, a new lower high has formed, then you can now keep selling conservatively. So you can now keep selling what? Conservatively. And don't forget that in an uptrend, we have what? Higher low, higher lows, higher high, higher lows, higher high. But in a downtrend, we have a what? Lower highs, lower low, lower highs. Then the next thing for us to be sure that the downtrend is continuing is that what? This lower low, a new low has to be formed for a price to what? To occur. So how do we call it head and shoulder? You see this right higher high and this left shoulder. The right shoulder is a higher high, and the left one, this new shoulder, should be a what? A lower high. So it is at this point that we see that price is changing direction. So let me mark this here as the what? Has the what? Right shoulder. Okay, this is the right shoulder. And let's go to this place as the what? So as the left shoulder. So where is the head? This is the head. Okay, let me draw this arrow once more. So this area is the what? Is the head. So this area is the head. Okay. So we have the head here. So this is the head. Okay, so where should you sell? You keep selling. So at this area from here to here, we see signs of what? Reversal. We see signs of what? Reversal. So the first sign for a reversal to occur is that instead of us to see a higher low, we then see a lower high. Then we know that this is the first sign of a what? Of a reversal. So in a place where you also see a higher low, you want to see a lower high, then you know that the first thing that is happening is reversal is what? Is imminent. So you see that reversal is imminent. So as from here, you keep on thinking, you change your movement from buying to what? Selling. So this is the head and shoulder pattern. So this means that price is changing direction from the uptrend to the what? To the downtrend. So for now, if price now wants to change another direction, you know that we'll be seeing series of what? Now, let's talk about inverted head and shoulder. So the number 2 is the what? Number 2 is the inverted head and shoulder. So number 2 is the inverted head and shoulder. So let's talk about inverted head and shoulder. So inverted head and shoulder usually occur So this usually occurs when a downtrend wants to change back to an uptrend. It's just the same scenario. You know, we've been seeing series of lower highs, lower low. So this is our new low. You know, this low is lower than this low. Now, what do we expect? We need to see a what? A lower high. So now when we now see the price, when we see the price has moved from here to here to form a new lower, a low around this region, then instead of us to see, then after that, we know a retracement has to occur. So for us to change the direction, what are we looking at? We are looking at price to form a new low lower than this region, right? But because price now comes to this area and forms a new higher lows, because it forms a new low that is higher than this what? Than this low. So when we now have a new low that is higher than this previous low, what are we going to wait for confirmation? We wait for price to break around this area to form a new higher high. So price forms a new high, which is higher than this high. So we have a higher low and we have a what? Higher high. Why is this place an higher high? You know, higher high because it's higher than this one. Do you understand it now? So this is an inverted head and what? Shoulder. So we have a head and shoulder. We have an inverted head and shoulder. So let me label it. Where is the left shoulder? Okay, so this is the right shoulder. Okay, this is the head. And this is the left what? Shoulder. Okay, so let's take it down. So how do you notify? So we talk about right shoulder. So this is the right shoulder. After that, we write the head. And the left shoulder. So let's change the colors to yellow or green. Okay. Okay, so this is an example of head and shoulder, an inverted head and shoulder pattern. So this is an example of head and shoulder, an inverted head and shoulder pattern. So when we have this, we do it like this. Okay, so this is another one. This is the last one. So this area is the head and shoulder pattern, and this area is the what? Is the inverted head and shoulder pattern. So that is the first one we are going to talk about today, the reversal pattern. And let me quickly chip in. In most cases, this is a very strong reversal pattern. All you need to do is to be able to identify your new highs and your new lows. So it is not difficult. This is a head and shoulder, and we have the inverted head and what? Shoulder pattern. So you need to recognize this pattern very, very well. So when we are talking of this head and shoulder pattern, we see that market has changed from an uptrend to a what? To a downtrend. So it changes from uptrend here to a what? To a downtrend. And how did it change? You know, it forms a low. Now, this place is called the neckline. This is called the what? The neckline. So why is the neckline here? This is the neckline. I'm going to write it. And this is the what? This is the neckline. So let me write the neckline so that we can understand it better. So neckline. So we have the neckline to be here. Neckline to be here. So neckline to be what? To be here as well. So this is the neckline. This is the what? Neckline. So reversal doesn't happen anyhow. Structures has to be broken. A whole lot has to change for a reversal to happen. So if you do not see this market movement or this structure in a chart, you shouldn't think of what? Reversal. The next that is happening is a retracement. Okay. So you shouldn't think of what? Reversal. So this is the first step of what? Reversal pattern. When you see that instead of this price to form a new high higher than this high, it is forming a low and is lower than this what? High. So you are seeing a lower high in an uptrend. So that's the first thing that will tell you that a reversal is about to occur. So when you see a lower high in an uptrend, it means price is about to change. And when you see a higher high in a downtrend, it means price is about to what? To change. So when you see a higher high in the downtrend, it means price is about to change. So this is the first one, the reversal patterns that I am going to explain today. So for us today, so all you need to do is check your chart. Once you check your chart, you give us so once you check your chart, all you need to do is identify your lows or highs or higher lows or higher highs. And when you notice that market is making a higher low, instead of, it's making a lower high instead of a higher high. So that's the first step that you should know that reversal is back to occur. So let's talk about the second pattern of reversal. The second reversal pattern is called the double top and the double bottom. Some people call it W and M. Double top, which is a hem pattern, or double bottom, which is a what? W pattern. Okay, so I'm going to explain this, but before I go ahead, if you have any question, kindly chat me up in the chat box. Chat me up in the chat box. Let me answer all your questions before we go to the next one. Okay, so somebody is raising up our hand. MD, please, I need you to raise up your hand. So I need you to chat. If you have any questions, just send a chat to us so we can proceed. So the next one we are talking about before we go into support and resistance for today is double top and double bottom. Okay, so let's talk about double top and double bottom. Now, when we have in a scenario, okay, let me clean this. Okay, let me rub it up. Okay, here, open this up. Okay. Okay, so let me relabel it for our better understanding. Change the color to blue. Okay, so we have higher highs. Higher highs. Okay, now let's talk about this double top and double bottom. Now, when we have price, now let's say that price in an uptrend. Let me erase this area. Oh, sorry. So in an uptrend, we see price in this region. So in an uptrend, we see price in this region. Okay, so we now have a higher lows here. Now our expectation, this is a double top. So let me explain what a double top does. So our expectation is that price should break this new high, right? This new high, this one, that price should break this for it to continue going forward. But price couldn't break it. What does the price do? Price was around this region, this area. So price could not break this region. You know what it did? The price came up to this region. Price came up to this region, this particular area, and it came up. And what did you do? It started what? Coming down. So when you see that price couldn't break this region, price couldn't break this what? This area. We have higher highs here and we have another higher high here that is equal. So price couldn't break this region. Then this is a what? M pattern. You know, 1, 2, 3. So it's telling you that the strength of the sellers in this region are more. So what does it do? And you now notice that price breaks this place. It breaks this to form a new low. It breaks the new present low to form a new low. So you need to wait for change in market direction. Change it, they call it change the structure. You need to wait for price to break this region before you think about selling. So once price breaks this region before you sell, then you have better understanding and better ways of trading. So once price needs to break these higher lows. Remember I said that in an uptrend, when you're supposed to see a higher lows, you now see a new low that is lower than the previous low. So that is the first sign of a reversal. So this is a double top and this is a double top. So this, you know, some people call it M pattern. So this is the first leg of the M, second leg, third leg, then you see your last leg needs to form. So it forms and must break this region. If it doesn't break this region, then it means it is not an M pattern. So this region, this area has to be what? To be broken. So this area has to be broken to form a what? A new low. To form a new low. So you see that we have this low is lower than this one. So once you see that scenario, then what will you do? You see price going up to retrace to form a lower high before it starts coming down. Okay, so price needs to break this low to form a new low. It needs to break this low to form a new low. Okay, so we have a higher low. We now have a what? A lower low, lower than this previous low. So this is the first sign that's to tell you that this trend is about to reverse. It's about to reverse. Okay, so this trend is about to reverse. Then what would we wait for? We're now waiting for a high, and that high should be lower than this previous high. So when we wait for a high that is lower than this previous high, we can now think of what? Selling. So at this place, notice a top. This is another top. So let me make it. Let me make us understand very, very well. So we have high. We have another high here. So which is our a higher high in this region, or we call it equal high. So we have higher high or equal high. So let me write. So we have high that is equal to this high. So we have higher high that is equal to this high. So this is called a what? Double top. So this is a double. So this is a what? Is a double top. Okay, so this occurs almost every time in our chart. So this is a double top. Then we have series of downtrend. Now let us talk about double bottom. Double bottom usually occurs. So let's say that the price has been falling around here. Okay, so let me rub up this place. Just a moment, I want to fix something. Okay, so when we have this lower low here, you know, so let's say this is a lower low, this is lower than this low, then price keeps performing, keeps going down. So we have a low here. So we have a lower high. Then a lower low, right? Then we have a lower high here. So now let's talk about this area. So let me label it. Let me label lower high, lower high, lower high. Then this area is a what? Lower low. So this area is a lower low. Now let's look at double bottom. So this area, you know, for price to continue or for market to continue going down, we need market to form a new low. Are we together? So once market comes down to this region here, this area, you know, I said something that happens here for an option to continue, price has to break this space, but it did not. Instead of it to break now on the downtrend here, instead of it to break this, price came here, touched this previous low, and what did you do again? Then it comes up. Now the coming of this price is price should be able to break this place. Okay, so this place has to be what? Broken. So this is a double bottom. Then if this place is broken, then we have retracement. Then we can now think of price going to the upside. So this is another pattern for what? For reversal that we need to take note. So reversal doesn't just happen. It happens. It doesn't happen anyhow. Okay, so some patterns has to play. Some patterns has to what? Has to occur. So you need to look at some patterns. You need to look at some patterns and you understand what it is. So this is a double what? A double bottom. So it is a double bottom. Let me write double bottom. Or we call it W. Or W, okay? It's a double bottom or W. So this is an example of a what? Of reversal. So these two, you need to master it very, very well. Price usually, especially the double top and double bottom, they occur most of the time. So when you see double equal lows here, you will, the next move should break this high. Once it has broken this high, then you wait for a lower high to occur before you start buying or before you start selling. So these are examples of reversal patterns that you need to understand and learn from today. So now let's go to support and resistance. What we have today, let me go to my slide. If you have any questions on the reversal pattern, please feel free to ask us any question on the reversal pattern. Okay, so can you all see my slide? Please, I need you to confirm if you can see my slide. So please, I need you to confirm if you can see my slide on the chat button. Okay, Victoria said yes. Okay, that's good. Now let's talk about support and resistance. What is support and resistance? Okay, Michael said yes. So what is support and resistance? Now, so what is support and resistance? Support and resistance are likely to floors and ceilings in a market. They are likely to what? To floors and ceilings in a market. So what do I mean by floors and ceilings? Every market needs to have a floor, and every market needs to have the floor is standing as a support for you. where you stand and you won't be able to go down below. So support is an area on a chart that price has dropped but struggle to break below. So an area where price has dropped but struggle to break below is a support area. Now resistance is an area on a chart that price has risen but struggle to break above. So a resistance is an area on a chart that price has risen but struggle to break above. So now let's talk about support and resistance. Support and resistance is an important part of our trading because it can be used to select trading opportunities for where traders to buy or sell and where to take profit. So now let's talk about why must you trade support and resistance. These are levels. These levels are the same levels that banks, large hedge funds, and other major players place their orders. So these areas are areas that banks, major players place their orders. Now, it helps in picking the best entry and take profits and stop loss levels for our position. Yes, so it helps in picking the best entry, take profit, stop loss for our position. Because these are levels where the market have proven in the past to have interest for buyers or sellers, meaning at the support areas, the numbers of buyers generally exceed the numbers of what? Of sellers. Yes. When trading support and resistance, the numbers of buyers in a support region, because support is a support is the buyers region. So the numbers of buyers in support region are more than the numbers of what? Sellers. That's which will drive the price back up. You know, as the price is coming down, it means sell is in action. So when it gets to an area that started going up, it means at that point, price is going up. Now, support and resistance, these are levels at which a lot of traders are willing to buy or sell a currency pair. If a pair is currently downtrending, we come into a level where there are a lot of buyers in the market. So this level is called a support area. Yes. So during a downtrend, what does it mean? It means that if price is going down in a downtrend, you know, when it gets to an area, it will go up again. That area that price gets to before going up is a support area because there are buyers in that area. Now, this level is called support. If a pair is uptrending and it comes to a level where there are a lot of sellers, this is a level of what? Resistance. So when the price is going up and it gets to a point where it started coming down, you know, that area is a resistance area. We can identify potential levels of support and resistance by analyzing past price actions as highs, such as highs and lows, rounds, numbers, figure, trend lines, pivot point, Fibonacci, just to name a few. So price support and resistance are level where the market has proven in the past to have interest of buyers or sellers. So these are previous highs and lows, what we call shelves and what ceilings. So the summary of what we are talking about is that when price is going up, it starts from a support area to a resistance area. And when it's coming down, it goes from a resistance area to a what? To a support area. Like we see on our screen here, price start from a support. This is home of buyers. Just have it at the back of your mind that the support area is the home of buyers and resistance area is the home of what? Home of sellers. So we have buyers here, price rallies up, then resistance, home of sellers, it rallies down, so sell here. So where you see sellers, so this is a resistance point, and this is a what? Support region. Now, let me quickly say something again. When price is forming a low, when it's coming down, and you see price has formed a low, either a lower low or a higher low, those low you are seeing is support area. They are buyers area. So a support area is a buyers area. And when price has moved high, it's going high. So when you see your higher highs, your lower highs, these areas are resistance areas. Okay, so you can see here support, resistance, support, and what? Resistance. So this is an example of a line chart. You see that price moves from this support area, these green bars, the green rectangles are support area. So this is support, this is another support. Then the top is resistance. We have resistance what? Area. So you can see another example. In an uptrend, price goes touch a place and start falling down. So you mark this place as a what? Resistance area. And when price comes to a point that it falls down to a point and started rallying up, from there it's a what? Support area. So these are examples of support and resistance. So how do we know support and resistance? By next class, we are going to go a bit deeper in support and resistance. So let's talk about support and resistance. Don't forget that I tell you that a support is the home of buyers, while resistance is the home of what? Sellers. So let's look at this chart. We see that this chart has been ranging downwards to this area, but look at this first point. Price comes here, move back up, right? It comes to this place again and move back up. So it goes to create another low that is equal to this low and rally back up. So look at this area, but when this price now breaks down, you see that price breaks this support, these two support area, this and this, to this area. Then what does it do? It came back to test the area before it starts falling again. So which means that when price becomes support and when the support area is broken, a retest will occur for it to start rallying up again. Now let's look at, we can also use trend line as support and resistance. You know, trend line is dynamic support and resistance. All you need to do, you see this trend, when price touches the trend, it couldn't break it to form a new low. What happened? It moves up, it couldn't break it again, it rallied up, couldn't break it again, it rallied up, rallied up. So all this is a what? Is an example of a what? Support and resistance. We can also use moving average too. So you know, I said that resistance is the home of buyer. So you use this moving average as a resistance. That is, anytime price touches the moving average and start falling, you know that these are sellers. So this blue area, price bounced about this 50 EMA, it comes down. So it tells you that sellers are still not around in this area. Now we can talk about flip zones. That is, support becomes resistance. So this is a support. Once a support area is broken, price goes back to test it to become a what? Resistance. So that is in a downtrend. It usually occurs in a downtrend. You see that every support area that has been broken, price will usually go back there to test them in order to fall again. So price will usually go there to test in order to fall again. So once you notice that a support area has been broken, all you need to do is to wait for price to retest that area again before changing direction. So in an uptrend as well, it also does the same. Price breaks the resistance, goes up, come back to the support and tested it, bouncing it off and start going up again. So you see that this is old resistance area, it breaks it and becomes a what? A support. So, and we have it here as well, support, resistance, broken down. When price rallies up, come down, rally up, come down. So this is a resistance area, this is support, and this is a what? Support area. So, and you can see as well, 1, 2, 3, 4. So this is support, resistance area. Now look at this. What is this example? This is a double top that we explained for a reversal to occur, or this is the first sign that reversal might occur, but look at it until this place is what? Is broken before we can know that reversal is what? Is imminent. So how do you trade support and resistance? Trading, all you need to do is you mark your support and resistance area. You wait for a directional move into the support and resistance area. So what does it mean? It means that if you want to trade support and resistance, all you need to do is wait for price to get to support area before you what? You buy. And you wait for price to get to resistance area before you what? You sell. So after that, you wait for the candlestick patterns around the support and resistance area. Then what do? You enter at the next candle, which is the confirmation candle. You put your stop loss below the candle. Then if it's buying, you buy at support, you target the next resistance as a what? Take profit. Okay, so we've gone to the end of support and resistance today. By the next class, which is next Wednesday, we are going to talk more about support and resistance as well. And also, because we are our own aim in Pacific Union is for traders to keep trading, and what will keep you trading is for you to start making more profits. So what we do is we have a software that helps you to trace this support and resistance, but it is for funded clients. All you need to do, fund your account, talk to your account manager, fund your account, and you can demand, you are entitled to the software. So all you need to do is, once you get the software, you wait for price to get to that direction, and you pick your what? You pick your trade. Wait for price to get to that direction, you wait for candlestick pattern, and you pick your trade. Okay, so if you have any question, kindly ask, or you could reach out to your account manager or chat, send a mail to me, send a mail to our chat box, then we have we reply you. And also you can watch these videos on YouTube. It's going to be uploaded on YouTube, so you can keep watching, keep learning, and keep making profits. Thank you for your time. This is the end of the class. Then next week I'm going to talk a little bit about support and resistance. Then we go to what candlestick pattern. Thank you for your time. Have a nice day, and bye-bye.